If you want to build wealth, you have to start investing your money, and the earlier you get started, the better. Welcome to another video on investing in the stock market. As always, hit subscribe if you like it. If you have any questions, drop me a comment. So I'm not going to give you 74 steps to become wealthy or how to become a millionaire by 30 or any of that. This is just a simple reminder why you have to invest your money. Whatever you have, invest it. And just to illustrate it, again, just as a reminder, you start off here with your savings. So presumably you have a job where you have income, and some of that income you can save up. Now, this money is in US dollars, euros, yen, pounds, whatever. But this money it's not a very safe form of wealth, because first of all, your money every year loses 3% on average to inflation. That's in the US, because every year more and more money is printed, thus your money loses value. And so the value of your money is controlled by the government. The government decides the economic policies, and they decide how much money is going to be printed. So if you just kept $10,000 in the bank for 20 years, you would lose 46% of your money, and you would be left with $5,400 worth. So if you keep money in the bank, your money is corroding away to inflation. So you want to move this way. And of course, you start off by looking at your alternatives. Now, there are many things you can invest in. I'm looking at these. These are available to anyone: stocks, real estate, bonds. And these assets, when your money is here, it's controlled by the free market or capitalism. And this is a very efficient form of governing, and the free market and capitalism has proven to work really, really well. And this is where your money becomes something with real value. These are assets. Real estate is something physical. It's an apartment, it's a piece of land, it's a house. This has value no matter what happens with the economy and no matter what the government does. Stocks represents ownership in a company which produces real services or real goods. Once again, it has nothing to do with the government. There's no inflation. You own a piece of a company. And bonds is money you lend to the government. So you switch the tables, and the government is bound by law to pay you the interest on your bonds. And stocks, and this is all in the US, gives an average of 8% every year. Real estate 10%, bonds 4%. And if you invested $10,000 in bonds, after 20 years, this would turn into $22,000. If you invested in stocks, it would turn into $46,600. And if you invested in real estate, either you bought your own apartment or you invested in additional real estate, it would turn into $67,200. That's only after 20 years. And if you kept your money in the bank, you would have lost $4,600. And if you put it in, let's say, stocks, you would gain $46,600. That's a difference of like $52,600 just by putting your money in stocks. And anyone can put their money in stocks. Just open a broker account and buy an index fund, and you will make this much money, at least statistically. And when you make as much money as possible, you save as much money as possible, and then you invest as much as possible, you can move to the end where you can achieve at least financial freedom. And this is where you take control of your money and your assets. This is when you maybe have a family to provide for. You might want to take this money and buy a big house, a car, you can buy art, you can buy something that you can control. You can spend your money traveling, buying food, whatever you want to. You can use the money to make yourself happy. This is where you take control and you are as far out of the government's reach as possible. So you can just have your money here, and when you take it out, you buy something with it. So you always control your money. There is no inflation, there is no just sitting in cash. It's straight from here to, you know, a house, a car, a boat, whatever. And if you're an average worker in the US, you make $44,000 a year, you save up, let's say $3,000 a year. If you're a really good saver, you could probably save up $5,000 or $6,000, but the minimum should be $3,000. And if you invest $3,000 every year, and that money grows at about 8-10% every year, this is not adjusted for inflation. After 20 years, that $3,000 a year, so that's like $280 a month or something, turns into $163,000 after a short career, a very short career, which is 30 years, it turns into $400,000. And if you invested $5,000 or $6,000 and it grew at 10-12%, we're talking about over $1 million just after 30 years. And most people work for 40, maybe even 50 years. And at that point, this is enough money to live off. So just by saving $3,000 and investing it, you will reach this point when you go into retirement. And of course, the more money you make, the more money you invest, the sooner you can achieve financial freedom and provide for your family. So however you want to get there, whenever you want to get there, just make sure you're moving this way and not the other way around. And of course, the better you are, the higher all of these numbers will get. There are many people making 20% a year and you know, saving way more than $3,000 every year. So this is just a reminder, you have to invest your money. No one is gonna provide for you when you're old. Don't trust the government, don't trust your retirement, your IRA. It's up to you. You will provide for you and your family, no one else. So do it yourself, get going, and good luck.